Today, I'm diving into the latest developments surrounding SoFi, unpacking the crucial data points, market reactions, and investor sentiment. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. To kick things off, SoFi has experienced a slight dip of about 0.23%. Despite this minor decrease, it's been relatively stable, especially when compared to other growth stocks in today's volatile market. The primary driver of today's market activity is the Consumer Price Index (CPI). The CPI numbers were released, and they came in pretty much as expected, which, in the grand scheme, is acceptable. However, the reaction to these figures has been somewhat subdued, with many investors seeming to shrug off the results with an attitude of, "It is what it is." When we break down the CPI data further, we notice that energy prices remained flat month over month, which implies that other categories in the CPI basket saw increases. This flatlining in energy costs has, however, led to a reduction in the probability of a 50 basis point interest rate cut at the next Federal Reserve meeting scheduled for September 18th. The likelihood of such a cut has fallen from around 57% to 37.5%. This shift in expectations is something the market is digesting, as it was previously more confident about a 50 basis point cut. The ongoing market obsession with monetary policy continues to dominate, as it appears that the market is eager for rate cuts to push stock prices higher. This intense focus on rate cuts underscores the broader market sentiment, where the slightest hint of monetary policy changes can cause significant ripples. As of today, there have been no new SEC filings or press releases from SoFi, meaning that the company's stock is currently at the mercy of broader market trends. The only noteworthy development comes from some recent 13F filings, which shed light on the activities of large institutional investors. It's important to note that these filings are not brand new information, but rather reflect activities that occurred during the second quarter. For instance, Citigroup disclosed on the 12th that it increased its position in SoFi by 251.48% on a quarter-over-quarter basis. This is a positive sign, indicating that significant players are still optimistic about SoFi's potential. Other major players like Vanguard and BlackRock also increased their positions in SoFi, with Vanguard boosting its stake by 8.07%. However, it's crucial to understand that these entities are known for lending out shares, so their increased holdings don't necessarily signal a long-term bullish outlook for SoFi. On the other hand, some new positions have been established by other institutions, such as Norge Bank, which took a fresh position of 13.9 million shares. This surge in institutional interest suggests that many big players see upside potential in SoFi, despite the stock being subject to significant manipulation and shorting. The anticipated new SEC transparency rule, expected to be enforced either in Q4 of this year or in the first half of 2025, could provide some relief to SoFi by changing the dynamics of short selling and market manipulation. Speaking of shorting, the short interest in SoFi has been on the rise, with 543,000 additional shares being shorted recently. Currently, 17.36% of SoFi's free float, equivalent to 181.71 million shares, is being shorted, which represents about $1.2 billion. The stock's utilization rate stands at 55.54%, while its short score is 72.21. These numbers indicate that short sellers are growing increasingly active, and this trend is something investors should watch closely. The cost to borrow shares remains relatively low, with an average rate of 0.86% and a minimum of 0.37%. Returning to the 13F filings, while the increase in positions by Vanguard and BlackRock has been viewed positively by some, it's important to remain cautious. These firms' primary business is not necessarily aligned with SoFi's success, but rather with their broader business model, which includes lending out shares. Therefore, while their increased positions might seem encouraging, they could also contribute to further shorting activity. Conversely, the involvement of institutions like Citibank and State Street could be viewed more optimistically. as these entities may have longer-term investment horizons and are possibly looking at SoFi as a long-term growth opportunity rather than just a short-term play. Currently, SoFi is trading at $6.62, hovering between a pivot level of $6.48 and a resistance level of $6.78, which was the high for today. The fact that SoFi didn't touch the pivot level today is a positive sign, indicating some level of support. However, it also struggled to break through the resistance at $6.78, which suggests that more buying pressure is needed for the stock to move higher. If SoFi can push past this resistance, it could potentially reach the $7 mark, where there's significant open interest in the options market, with 53,000 contracts at that strike price. But with upcoming economic data, including initial jobless claims and retail sales figures, there could be additional volatility that might influence whether SoFi can achieve this breakout. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.